Hi, this is Zach with the US Chartbreakers here at Zach's Traders Cafe for Wednesday, the 7th of June. Starting off with the S&P, where we really retraced part of the rally that we saw on Friday, so that's normally a good sign, like a third of it or so. At worst, intraday, looks like we're ready for a new leg to the upside through 4,300 and then up to potentially as high as 4,360 by the end of next month. It could be obviously much sooner, but we're being conservative here. On the downside, probably the worst we'd expect is back down to the 4,200 area, although ideally not lower than 42.20.30 at the worst. Moving on to the stocks, and AMD is next, Advanced Micro Devices. Here, beautiful consolidation here. We already hit one of our targets around $117. Above that, we're looking for a fresh leg to the upside, potentially up to 145 by the end of next month. Always good when we have support coming in at the top of a gap. Obviously, at this stage, only back below the floor of the gap there, around $110, really questioning the ongoing break to the upside there for AMD. And you can see that the rally started with unfilled gap to the upside back in January. We haven't really looked back since. Had another one there in February. So this is a stock with a lot of momentum, quite rare momentum on this situation. The new stock for the chart breakers is D-Wave, and here, beautiful U-shaped or saucer-shaped reversal off the lows. Rising trend channel there from the beginning of the year. Top of that channel heading for $3.20. We're looking for that by the end of the month, hopefully much sooner, maybe even by the end of this week, the way things are going, while we're above the initial resistance there around $1.80. So we're above 180, looking for 320 over the near term on D-Wave. Stock which gets quite a lot of coverage here is Fuelcell, and here the interest is that we've punctured the 50-day moving average there around $2.30 for the first time in quite a while since March. Above the 50-day line, we're looking for the 200-day line at around $3.10, and hopefully we'll see that by the end of this month. Obviously there is some resistance around the $3 area, but the 200-day line would be a logical place for the shares to go. Moving along to another new name, and here we've got equally bullish looking setup. You can see the unfilled gap to the upside through the 200-day moving average for Gitlab, and above the 200-day line there around $43.80, looking for as high as $60 by the end of next month at the top of a broadening triangle from back in November. So pretty dynamic. It's also a bear trap island reversal, so gapping down, making new lows and then gapping up. So that's quite a decent cork in water type rebound for that stock. Another new name is coming up, and it's Hoth Therapeutics. You can see we're a bit in the air with the gap high that we had yesterday, but the view at the moment is that above the $2.90 area, which was the old resistance, we could still head up to $4.50, retesting the top of that the range yesterday, and also a resistance line there from March, which is effectively the top of a broadening triangle base that we've had in place over the last 3 months. Best case scenario target up to $6.60, but maybe that has to wait for July or even longer. Moving along to Lyft, which I have looked at here before on several occasions. Here you can see that we've broken above the 50-day moving average quite nicely. That's around the $9.40 area, and above that we're looking at the 200-day line at the top of that broadening pattern there since March, as high as $12. To be hit as soon as the end of this month. Nice situation coming up next, if you're a bull, that is. Here you can see that we've got Microvision, massive move to the upside there. We had an initial target there around $5, which has been blown out of the water, and we're looking for a new target, hopefully by the end of this month, as high as a January 2022 resistance line projection at $8.80, and hopefully we could see that by the end of this month. Upside certainly valid while we're above the $6 area, because that was the old July-August resistance from, or actually early 2022 resistance from last year. Moving on to another firm favorite here, which is Marathon Digital. Here you can see that we're still trying to break out in a meaningful way. We've got a rising trend channel in place since December, And just looking with the shares to give us an end-of-day close or a weekly close through $10.50. That should do the trick. And if we can do that, then it could be as high as $15 here by the end of next month. And the good thing here is that basically the stop loss is no lower than $9. We've got the 50 and 200-day moving averages there as well. RSI has been bouncing off the 50 level as well, so that does suggest that we've got the momentum there behind the recent price action to deliver a breakout, and indeed some people would already be buying into the setup that we have. Another stock which has done us proud in terms of the upside is Shopify. It was originally a request, and I think earlier in the year, and it's done very well indeed. We already hit the top of that rising trend channel once there, around $65. That's now up to $69, let's call it, so that's our target for the end of this month. Maybe by the end of next month, we could be up at $80 at that September resistance line projection. Upside valid while we hold above the $60 area. Just a couple of to go now, and first one is SoFi. Here we have a improving situation. We've already broken through the initial target there around $6.80. Above $6.80, we're looking for as high as $9 at that July resistance line projection. And hopefully we'll see that by the end of this month. Double gaps to the upside. Island reversal, it's got everything really. Bear trap island reversal, so looking very interesting indeed. And we've even got the 50 and 200-day moving averages both rising as well. So it looks as though people caught short on that particular situation. Moving on to the last one here, and that is Tesla. But here we've had the big breakout through the 200-day moving average and through the initial target that we had there, that resistance line there from February, above the $200 level and the 200-day moving average. We're looking for as high as $245 by the end of this month, maybe up to $280 by the end of next month. But the key here is remaining above the 200-day moving average, which we haven't really done comfortably since back at the end of July last year. That's it for me today. More updates tomorrow.